Welcome, it's the Crypto Sniper. Glad to be back with you. And here's what we're going to discuss today. I'm going to show you three charts. That's right, maybe a bonus thrown in at the end as well. I'm going to throw you three quick charts to have a look at. And I'm going to make the case to you that Bitcoin is ready to go for a new high in its move up since we've called a bull run. However, that it is squeezing and that there will be a potential pop out the top or a bit of a breakdown that may be of larger scale. We'll cover that when we talk about the rising wedge that Bitcoin is creating with the buying along the bottom. But the main theme is Bitcoin dominance. Dominance is breaking out of a basing structure at the bottom. We'll be covering that, and we'll probably start right there in a few seconds. What does this mean, however? This probably means to me that it's almost a little bit less about the tech right now, the good old metaverse and how you're going to have strapped on goggles in a dark cell, living in a virtual environment, having virtual holidays in your 15-minute cities, in your little tube apartment existence. No, it's more about the fact that there is real concern around money. The demonetization trend of the dollar. By the way, don't forget, no lesser lights than Stanley Druckenmiller says the only conviction trade he has right now is the trend of de-dollarization. That is going to be consistent and it's going to whittle away, occasionally have real spills down and whittle away. You saw it with the pound as it lost its significance. Also, a withering on the vine, but with occasional spells of complete disruption where it really loses a lot of ground. Everything that is being done by the US government is designed to destroy the dominance of the dollar. Made to look incompetent, that's why they put a dithering old pedophile such as Joe Biden in charge. But don't be fooled. It is all by design and plan. So Ross has spoken about this before, about the withering of the dollar. Kissinger's told you the money is moving east, and with it, no doubt, the gold and possibly also the Bitcoin. So the Bitcoin dominance breaking out of a basing structure is going to be more about for us the notion that in actual fact, people are looking for alternative to fiats. What's bad for the dollar is actually bad for all fiat currencies. Yes, you'll see the Euro USD trade up inside the rotten bubble that is fiats on the de-dollarization. Yes, you'll see other currencies maybe float up a little bit against the dollar. But as the king fiat, the entire system, the debt system, is also under threat. And as a result, people are looking for alternatives outside the fiat bubble, which is seeing the movement and the bull market in gold and also the resumption of some upside in silver. We haven't yet seen the full overperformance. That's all still to come. But you are also now seeing Bitcoin getting some respect and dominating in terms of market cap and coming out of levels it hasn't come out of since 2021 when it fell into low levels of dominance in the mid 40s. So let's go to the charts that I've annotated for you to illustrate this point. And we're going to start straight actually with the trickier chart, the dominance chart. So here you go. You can see this orange box that I've drawn. This was when Bitcoin started to fall in to the lower echelons of relative valuation on dominance. You will see that that coincides roughly with a 48.2 over there level. And if we see that, it has since, for quite a lengthy spell now, been zigging and zagging along the lows that are sub 40, at one point trading below 39. You can see here you're around 38.6 to 48.2. This has been a zonal range that Bitcoin's dominance, in other words, share of the total market cap of everything. When it was all about the tech, the metaverse, Bitcoin was the old fuddy-duddy grandfather in the room. Now that it's about real money, people care about longevity, brand, and restricted number of tokens. The 21 million suddenly goes from being a problem to a feature. And here you have the zigzagging in a simplistic sense. This is how you've gone up and down. And you can see that we've revisited both the high side and the low side. This is a chart we put in front of you a couple of times. We watched dominance. We called for the bull market for Bitcoin and to be Bitcoin biased during this period. We were also calling for the inverted head and shoulders. We'll get to the Bitcoin dollar, but I wanted to start somewhere different. Now, this is where you are. You've actually been holding for quite a big period. So let's just reduce some of the Picasso lines there and the crazy draws, and just show you that this time you've not run away nearly as quickly. In most instances, these visits have been very short and very brief on high volatility, super spike and dump, super spike and dump. Most of them are wicks, some of them very little candle bodies. What you've actually had is a sustained holding play at the 47.50, that blue number, 47.5. We define that as a key level. Bitcoin has been straddling that smaller box for a sustained period, and now it is having a second go at pushing higher. Overall, we think the next cluster of significance will come in and around these levels. That will actually be Bitcoin larger than the rest of the crypto market. That's right, 51% plus. So that point, after reaching that, you may have a little bit of a dip. This is what we're suggesting, but that this will be a move out of the lows. This could be a move out of the lows that it's been in since, you can see this date, May, way back in 2021. Now don't forget, that's almost 2 years ago. We're here right now. So this has been a 2-year entrapment box. That orange box that we have shown you, 2 years of entrapment. And now you've been tightening up in this top right corner, and it looks like you're making a real effort at getting above that. So that is chart number 1. And the key point we're making here is this breakout in the dominance box over here is indicating that there's more likely to be a fiat crisis. Now, there's other tokens that are doing well, by the way, and people are recognizing this. They're not all doing badly. I mean, Ethereum's up 6% for the last 7 days. We do expect that to eventually to take over and overperform, but you've got Bitcoin at 9, upper 8s and 9%. We'll be showing you the crypto market cap in a second as well. So what's probably driving this more is the money factor. What is money? Fiat is no longer being perceived with safety. Why? Because money is borrowed into existence, there's too much debt, and the fiat system is clearly wobbling, with the king of fiats clearly being challenged. It is bad for all fiats, is the point that I make. Okay, so that was chart number 1. I want to show you the annotations that I've done for you on the Bitcoin versus dollar price, and just give you an idea of this. This was also shared. We discussed this a lot in our updates with the community, and I shared this particular chart on Twitter, the 3 impulse rising wedge. So we've had a basing period over here. You could even argue there was a bit of a W bottom in that as well. We've drawn that, we discussed that. Not quite as low on the second butt cheek, but there you go. 1, 2, and our expectation here is that this will actually run the 31 high and go a little higher, much like the trajectory I've highlighted to you in the orange. The question and the key inflection point then becomes what happens here at that juncture. Do we go up, visit, have a small pop out the top and a moderate pullback before winding up and going further? I would say there's a pretty high chance of that particular scenario. That's the gray scenario I drew at this key intersection point that we're highlighting right there. What else could happen is you could just go really strong. In other words, the de-dollarization continues to be a major concern, and you could go very strongly to the upside and have a melt up. We refer to that as a type 3 rising wedge. By the way, learning how we annotate and do our form of Hunt volatility funnel method technical analysis, look in the description below and click that very first link, and you too can book a call and be getting this kind of information first up. We are going to look at that and say, well, what kind of structural direction will this take? It'll be a little bit precarious. Rising wedges are a problem, and they are typical of retail that suddenly feel that there's a bull market and they come up very strongly and steeply under the market, but there's still some distribution that is tactical distribution into overriding strength. So what you get is the squeezing up nature. There's a bit more FOMO in the buyers than there is, and there's more tactical selling with the sellers at the moment. In fact, the overall liquidity presumption is around 3 million for Bitcoin. Most of it is being held pretty hard, locked up, and that there's only around 3 million easy to buy. So the actual stock that's readily available for purchase might not be as much as everybody thinks. The pink is a typical rising wedge formulation, and we'll point to a more recent pullback. We still have a key level that is not showing on this diagram. I didn't want it to clutter the overall what we were showing, but don't forget we called the breakout of the 25,000 as a key seminal event, and that was the right shoulder that came in under the 20k. It doesn't want to let me draw the angle line. You're such a pig. So there we go. Let's try it from here, and there we go, like that. That's your right shoulder over there. Now that just dipped through the key 20k level, and of course the 25,000 is right there. Now, could you get a revisit? Well, on the basis that we'll now be a lot higher here, it's actually going to take quite a nasty sell-off, assuming you're at 32k, to get back to 25. What could do that successfully? Well, a demand-destroying event of great pain, where people are forced to actually maybe sell Bitcoin to make rental checks and things like that. That could possibly do that. But I would not say that's in the highest probability of my scenario. But we do see that as a higher threat. Generally, it's normally a very low threat, but at the moment it's higher than is typical. But that's still a lowish threat. Don't forget, currencies will still be ever under greater scrutiny. Fiat currencies. So to dump the alternatives is probably the last thing most people are going to want to do. They'll probably sell stocks first. They'll probably sell other items first. Okay, so that is the rising wedge on the 3 impulse. We think you go higher here. If you were to just match it and be a bit blocked off, I don't think that happens, but it could happen. That could be one outcome. We also have another scenario for you, which we will draw, which could in fact see a run through the wedge, and that's this. So the wedge currently goes in and around, and I've dropped a time frame here. It's going through here like this. But what could actually happen, so it's representing something like that, and going back obviously to the left. We're on a lower time frame. We've dropped from the 2-day to the 12-hourly. What could happen is you could follow this pink line, wind up, you could square up out of the wedge. That eventually sees the wedge effectively be broken, but without any great drama. So it's more a case of we're flattening and we're hanging on a price level. So price level becomes more important. You form a squeeze around that price level. Let's stay maybe with the pink and double up the lines to make it super clear. You form a nice squeeze around it. You break the basing ascending grind line of the wedge. So that part of the technical pattern is now nullified. It's happened. It's got done with. It got dealt with. There wasn't too big a pullback. That would effectively be your break and then a return move and a little bit. But at the end, you've held on price. Again, I remind you what a key level the 30k has been. The 30k has been an extremely key level. So let's go to those charts. This is your live Bitcoin dominance. It continues to work higher, 48.42. We've got to put a key level in there, which is clearly the 50% mark. At that point, the overall Bitcoin market cap is higher than everything else. That is a significant key level, the 50% mark. Let's go to the live prices again and have a look at the Bitcoin live price. So we'll go over here. I'm on Phoenix at the moment. We'll take that off just to cut you some slack. You've seen the rising wedge. What could happen if you fail to make a new high? In some ways, it can actually be better because you could do that, which could then pop over. However, I feel we're going to make a new high and we're going to go into the wedge scenario. This would actually stymie the bearishness or that key squeeze moment that the wedge is going to inflict on you. And normally, in normal circumstances, those are bearish events. So you could, as I say, have something come down the pipe that is not too friendly. Could be further FUD, could be XYZ, who knows. That will be decided as and when. So actually, I would love to see us not make an initial new high and start holding a price level and run this lower line. but it's not quite clear that it happens. So we have a number of scenarios for you, and I think the one we will see is a drift higher. So you're squeezing higher. You are squeezing consistently and steadily higher along the steepness of the buying coming in. And you go and make that third impulse, and then we have a demand point. So a warning, if you were to get too aggressively long, and you end up having a down move here, and then you fall out bearishly out of the rising wedge, and you come and you visit the 25K, you could get washed out. So this makes for difficulty trading inside of these patterns. However, don't forget, we still have the macro, and we have called for the 40K to be run and a possible 42.5, which is a major neckline revisit. Here was the significance of that 30K that you are looking at right now. It showed that it was a key level on the way down. That 30K runs straight through that flag on the downside, and it's not surprising that we just put a couple of toes through it and then had a bit of a pullback, and that it makes up part of the resistance. In the same way, the 25K was over here. Remember that. Okay, so we're giving you some context on the price levels for Bitcoin. What about Ethereum, which is the alt? And I'm not going to go down much further down the rack, but we can quickly do a check on crypto market cap. Wipe our face a little bit. You can see it's come off a little bit. It was through the 8% at 7.76. Ethereum was 6. It's now 5.9. You can see that it's the last 24 hours. It's beating Binance. It's beating XRP. Cardano's put in a decent shift and is not far off Bitcoin. Quite a high cred token, Cardano, in fairness. Then you've got Elon's plaything, and then Matic at 7.3. Yeah, very good performance from Matic as well, and Solana. So those actually have now caught up a little bit with Bitcoin, but the dominance overall for Bitcoin, remember this is a 24-hour, that's a rolling hour. So as Bitcoin rests and one or two of the others get a bit of a bid, their percentages at this moment can look better. But the dominance overall is seeing Bitcoin nibble. So I think many people will pivot too strong. It's not a bad thing to have a reasonable holding of Bitcoin during this early phase. You'll have plenty of time to alt dive when things get disorderly to the upside and we get a real run. So that's it. Yeah, that's our top lot. The rest, Litecoin, etc., threes and ones, it's not part of the main action. Again, the top tens are actually the key ones. So what you're also seeing is a little bit of a shitcoin factor. The smaller tokens are not moving as much and as significantly. The lower you get, you're not getting as big a move. There's the odd exception that's got 6%, but they've probably been pretty poor over the week, 9% down the whole week. So a single stat for 24 hours does not a great story make. Again, 5% down for the whole week on 11. So I would say the smaller caps are probably struggling, and the established tokens are winning out. And Bitcoin, given that this is a financial potential event that is looking for a money or a store of value that has greater true material holding for these fiat challenging times, I would argue it's one of the reasons why Bitcoin is dominating. Okay, by the way, but leave your comments below. Why is Bitcoin dominance up? Is it a proper breakout? Is it going to be a freight breakout? I'd like to hear what you think. Will we just come back in? Remember, just because you're testing that top right corner doesn't mean it can't have a break and come back in to the level. It can straddle that 48% for a while, that 47.5 zone before going higher. So that can be part and parcel of a process going higher. Where do you think that rising wedge is going to go? Is it going to melt up? Type 3, is it going to have a little pop out the top and then largely sell off for a moderate sell-off, or is it going to be a return possibly all the way to 25K? What do you think? That's what matters. But those are the scenarios we're throwing out for you. I'm going to finish with an Ethereum BTC, just as a quick update on Ethereum, which is the largest, most significant alt. Also done a reasonable amount of upside today, as you can see. Remember that technical 2000 that had to be run, that we called for? That 2000 is there. Let's turn the light on there. A lot of lines in here in the mix, lots of little squeezes higher, but you can see that technical 2000, the fat blue line. If that runs 4.5, potentially could get very exciting again for Ethereum. From current levels, that's more than a doubling in terms of what you would see. But what about ETH versus BTC? We've spoken about this. This falling wedge right now, you're completing what we would consider to be a third impulse. So that overall looks like that. A little bit of a grinding down leg. Again, third impulse in a falling wedge. One, you got your bloated two, that is very typical, and a bit of a downturn over here that'll come into around about these levels. At those levels, you then sit at a very interesting place where Ethereum, we feel, will eventually start to outperform. So that's no longer so much about the money, it's more about the cryptoverse as a whole getting back its mojo and moving again. But there will still be the perception that these are non-proliferated, even though Ethereum does have an inflation rate associated to it. This will still bring in a lot of money out of possibly fiat and get cryptos now in the middle as a viable option and alternative to the fiat currencies as the world hits this key tipping in a failing debt fiat system. Okay, we'll catch you later. Thanks for the shares and the likes. We appreciate it. Don't forget, click those links below. You can also get Simple FX for trading gold. Below, you can buy gold. Remember, don't have a fast horse, have a stable of horses. And of course, we look forward to catching up with you next time. Follow us on Twitter at The Market Sniper, the Crypto Sniper. Bye.